Tax benefit, tax savings on account of interest. If you are new to this concept, watch this video fully. Let me take you through two scenarios, scenario 1 and scenario 2. In both the scenarios, the earnings before interest and taxes are one and the same, which is 100 million. And in scenario 1, there is no interest. In scenario 2, there is an interest of 30 million. It means the profits in scenario 1 is 100, same, whereas in scenario 2, it is 70 million. Let us pay tax at the rate of 30%. So 100 into 30%, 30, 70 into 30%, 21. Profit after taxes, 70 and 49. Now let us put our focus on the tax that is paid in both the scenarios. In scenario 1, the tax that is paid is 30. In scenario 2, tax paid is 21. In both the scenarios, the earnings before interest and taxes are same. And if you see in scenario 2, you have paid only 21. When compared with 30, you have saved tax of 9 million. And from where you got this 9 million, it is very simple. This 9 million is nothing but the interest that is paid multiplied by tax rate. Yes, interest paid is 30 million. 30 million multiplied by tax rate of 30%, that gives you 9 million. And this tax savings or tax benefit is purely on account of interest.